Hello everyone. It's great to have another opportunity to talk to self-employed entrepreneurs. My name is Jeff Godwin. I'm a CPA and I currently work for Intuit TurboTax in San Diego. I've been preparing tax returns for over 35 years and this works out well because today we're going to be talking about accounting and taxes and the requirements for self-employed individuals. Now let's get started. First of all, we're going to dive right into new to self-employment, sometimes referred to SE for self-employment, and people wonder what to expect. Accounting and taxes seems to be the newest and scariest part of diving into self-employment, and I'm hoping that today I can help demystify some of those issues. Infrastructure. That's the first thing that you should be thinking about. Many times when we're an employee working for an employer, we don't have to worry about infrastructure, but now that you're running the whole show by yourself, start off by thinking about a business license. Now that's pretty much governed by whatever county or city that you're operating in and what type of business license you may or may not have to have depending on the industry that you're operating in. Now, what about liability insurance? Again, something you may not have thought about before, but this time around, look out to different carriers, talk to them about the type of business you're in, and look to see if you're needing liability insurance to cover yourself from any possible exposure to your new self-employment business. Another thing that I would encourage you to do, being self-employed, running your own business for the first time, is be excessively organized. Now, what do I mean by that, and what can you do to be excessively organized? First of all, sole proprietorships normally have a reputation for commingling, their personal business and, their business activities. And I encourage you to separate them in every way you can think of. Now, a good way to do that is start off by your checking and savings account. Have a separate checking account that's used exclusively for your business. Separate savings account. Credit cards. It's an excellent idea to have a credit card that you only use for business and nothing else. What about self-employment taxes? Even that word alone sounds like something that's people don't really want to deal with, but I want to tell you, think of self-employment tax as just another word for Social Security. Now, most people, when you had a regular salary job or hourly employment, we call that W-2 income. You were used to looking at your pay stub every Friday or every other Friday, or however often you got paid, and you looked at the deductions and you saw FICA. Well, that FICA, F-I-C-A, is Social Security. Now, it was about 7.5% of your gross salary that they were taking out or deducting for Social Security. And then your employer was matching it, taking another 7.5%, approximately 15%, and sending it off to the government, earmarked under your account, your Social Security number, for your retirement. And when you became eligible to receive Social Security benefits, the amount that you're eligible for is totally dependent on the amount that you paid in. So this self-employment tax that's paid by self-employed individuals is another form of Social Security. Now, the other thing I should tell you is that this is on profits and not on gross. So that's good news. So that 7.5% plus 7.5%, 15% of self-employment tax is going to be on your net profits and not your gross. It's also in addition to regular taxes, so not to be confused with regular income taxes in addition to. Now, quarterly estimated tax payments, something else that we need to talk about when you're going to be self-employed. And a lot of you are thinking, no, wait a minute here. Why do I have to make quarterly tax estimates? I don't even know for sure exactly what I'm going to owe. Why can't I just wait till after the end of the year, I'm filing my tax return, and I'll settle up then? And, and the IRS is going to go, no, we want you to pay as you go. And that's not dissimilar to the withholding that comes out of a regular paycheck. When you have W-2 income, you are in essence paying as you go by deductions out of your paycheck. Now the government wants you to pay quarterly tax estimates. That's every April 15th, June 15th, September 15th, and January 15th of the following year. And the way that that's done is you take an estimated annual tax liability for your self-employment, your profits from your business, and you divide that by 4 and make 4 quarterly tax estimates. And there's consequences for not doing that. If you pay underpayment for not paying enough or for paying late, the government will penalize you for that. Now, keep in mind that you're only making these quarterly estimated tax payments on your self-employment income. If you have other income, other W-2 income from an employer, that taxes is already being handled by way of withholding. And if your spouse has other income, then your spouse's W-2 income from wages or hourly earnings, the withholding will pay for any tax liability that may be due on that income. So let's move on now. Self-employed health insurance premiums. Now, I only bring this up because it's handled a little bit different for self-employed individuals than it is for people that have an employer. Employers typically have health insurance, and maybe you have a plan that's covered by your employer. If not, maybe you went out to the marketplace through ACA, Affordable Care Act, also called Obamacare, and secured health insurance through the marketplace. But let's just say that you're paying for your health insurance, and can you deduct those premiums? Now, in the past, the answer would be only if you itemize on Schedule A and only if it exceeds 10% of your adjusted gross income. Pretty tough. Very, very seldom do people get a deduction for medical related expenses. And when I say that, I mean doctors, dentists, eye care, health insurance premiums, hospitals. All of those are normally deducted as the itemized deductions, and only if you itemize. In this case, it's very possible that you may be able to deduct health insurance premiums as a self-employed individual, even if you don't itemize your deductions. Now, that said, let's move on to accounting for self-employed individuals. Record keeping. It used to be that everybody had a whole wall full of 4-drawer filing cabinets. I had them myself for every business I've ever owned. But nowadays, as you know, more and more people are going paperless, which is great. Scan documents, store them in your computer, make sure you have good backups, whether it's local backup or off-site backup. And then software like QuickBooks and Quicken and Mint. Excellent tools to help you stay organized, to help you keep track of all of your expenses. Now keep in mind, people wonder the timing. When do I get to deduct my expenses, and when do I declare my income? And the answer is this. For the most part, you're going to be what's considered a cash-based taxpayer. And what that means is that for the calendar year that you're doing your accounting and your taxes, you're going to declare the income that you actually received during that calendar year. So it's not so much when you earned it, it's not if you have accounts receivable, it's when you were actually paid. And the same concept goes for expenses, okay? So it's not when you incurred an expense, it's when you paid for the expense. So in that calendar year, okay, any and all expenses that you incurred that you're going to deduct, okay, or need to be paid for in that calendar year. Now indeed, if it's December and you charge something on your credit card, even if you didn't pay your credit card bill, if you charge it on your credit card in December, the deduction is in December for that calendar year. Okay, so what about receipts and my credit card statement and my bank statement? Is that good enough? Do I need to keep all my receipts? Which is an excellent question. And the answer is this. The IRS auditors have, some flexibility to be reasonable in that regard. And that means that if they saw a bank statement or credit card statement and it said $26 on it from Office Depot for office expense, you're fine. Probably not going to need that receipt. But if you took a deduction for $2,000 and all it showed on your bank statement or credit card statement was $2,000 and a date and Costco, probably not going to fly. And even if you divided that and said, well, of the $2,000, $300 was for groceries and the other $1,700 was for a laptop computer, still going to be needing that receipt for that $1,700 laptop computer before you're going to be entitled to take that as a deduction. So what is deductible? Excellent question. The answer is this. Anything ordinary and necessary, okay, to operate your business, meaning anything that you needed to spend to help generate that income, okay? And on Schedule C, it's itemized pretty well. the obvious expenses, from vehicle expenses to office expenses, supplies, materials, repair and maintenance, your cell phone, utilities, okay? All of those are legitimate expenses that you need to run your business, and they are deductible. The only small exception to that, and it's a fairly small exception, is that the IRS code says that something that is against public policy is not deductible for tax purposes. And what that means is this: if you were driving down the street and you got a speeding ticket, okay, you can't write a check to pay for your speeding ticket and take it as a tax deduction, okay? And that's the small exception to that. Okay, so let's keep moving. What about QuickBooks Self-Employment, QBSE? It's a fairly new product designed by Intuit. And QBSE, QuickBooks Self-Employed, is specifically geared for you self-employed folks, okay? It helps you stay organized. It helps you log in all of your income, download from your checking account, download from your credit cards, right into a P&L that creates your income, creates all of your expenses. And there's even a tool, or a feature, if you will, built into QBSE to help you make your quarterly estimates. Then the really cool thing is it's integrated with TurboTax. So all year long, you're running your business, you're recording all of your income and expenses, and then after year end, you can download or import, if you will, all of that data, all the income and expenses, right into TurboTax. TurboTax Home and Business product will populate as many fields as we possibly can for you, whether it's names and addresses and that type of information. But more importantly, it'll populate Schedule C, which is the form a self-employed individual needs to declare their income and expenses. So the income and the expenses that you work so hard to stay organized and log in all year long are now going to be pre-populated in your Schedule C. So that's QuickBooks Self-Employed. Let's talk about taxes for the self-employed. Now, TurboTax has a lineup of products, and you've probably heard of them. They go from, basic to deluxe to premier. Premier is pretty much geared for investments, capital gains, stock transactions, rental properties. And then the Cadillac version, which is called Home and Business. That's your version of TurboTax, because that Home and Business version is specifically geared for folks with a Schedule C. You may need to depreciate some assets like that laptop computer or some office equipment or perhaps a printer. And it'll include Form 4562, which is the depreciation schedule that flows over nicely to Schedule C. And so QuickBooks will import directly into the Home and Business, and it's the TurboTax Home and Business version that's specifically designed for Schedule C. Now, another tip: it's very important for you to identify on your tax return the Schedule C is for you or for your spouse. Now, if you're a single individual, it's kind of a no-brainer. We know it's for you. But if you're married filing joint, let's say, there is a place where you need to check a box. Is that for you or is that for your spouse? And the reason we do that is because, remember I told you earlier, any self-employment tax that's paid on a business, it is sent to the government and needs to be earmarked for retirement. It needs to know whether that's your spouse's self-employment income and Social Security taxes that you're paying, or yours. It's also important to maintain that this is a sole proprietorship, not to be confused with a corporation, an LLC, or a partnership. Okay, you and your business are pretty much the same entity, not a separate entity. You're liable for any income taxes that is incurred as a result of running your business, and it's included on your regular 1040 tax return. So, moving along, what about Forms 1099 Miscellaneous and 1099-K? Excellent question. Now, payers are required to send out a Form 1099 for payments for services in excess of $600 in the calendar year. And not only will the recipient of these funds get that Form 1099, but also the IRS will get a copy of that. It's important for you to know that, because come tax time, you need to make sure that your Schedule C income is equal to or exceeds your 1099s, either whether you have one of them or 5 of them or 10 of them, it doesn't matter. But the total of all your 1099s, okay, they need to be reflected on your Schedule C. The IRS does have a matching process. It's interesting, there's not a human being even involved in the process. The computer will look at all the 1099s, they'll look at your tax return, and they'll just make sure that you're recording all the income. And if you're not, Okay, you get a nasty letter that us tax pros call a CP 2000, and the IRS generates a lot of those letters, and they basically say that you've unreported your income, and here's your additional tax penalties and interest, and then it's up to you to prove that you did indeed record all of your income. Okay, so that has to do with the 1099 miscellaneouses. What about that 1099K? And the 1099K is fairly new in relationship to the 1099s, and it was created because there's a lot of electronic transfers nowadays. Whether you're getting paid through PayPal, maybe you're getting paid through a credit card processing transaction, but this is a way for the IRS to keep track of income that has been reported electronically. Now, they should not overlap. You should not get the same income on a 1099 miscellaneous and a 1099K. And also, it's very important for you not to duplicate your income. If you're recording your deposits in QuickBooks Self-Employed or any other software all year long, and then that income you're reporting on your Schedule C, okay, chances are that is some or all of the same income on that 1099 that you got. So don't enter your income in twice. You'll be doubling up your income and then doubling up your taxes, and you don't want to do that. So let's wrap some things up here. This is our crash course for self-employment. I hope that it's helped you. And I hope you can make it back to one of our upcoming chat events, okay, here on this same network, which I will be hosting as well. I'm looking forward to hearing some more of your questions, and take care for now. Thank you.